In today's video, we're going to be having a look at Joe Biden's inauguration. We're also going to be looking at what's happened in stocks as a response, and from there, the Bank of Japan and Australian unemployment. Hello, and welcome to another acysecurities daily report video. My name is Alistair Schultz, and I'm going to be a host through today's trading journey. The first thing to look at today is Joe Biden is now the 46th president. It's a new day, a new president, and a new all-time high. We've seen some of the largest moves of an inauguration since 1937, with the S&P 500, the Russell 2000, the Dow Jones, all of them racing up at the announcement of his inauguration finally going through. He's already started to combat some of the policies made by Trump, with supposed getting signed off on immediate action to happen. So we will have to see what all of those things are about a little bit later as he gets through on with for his first day as president. Now, looking at some of those charts I was talking about before, you can see behind me the Russell 2000, the Nasdaq 100, and of course the S&P 500 and the Dow Jones, all of which have breached their last highs, or at least come very, very, very close to breaking them. So what is actually going on behind the scenes here that is pushing us to see a little bit more optimism in the market? The first of these things we have to account for is fiscal stimulus. Fiscal stimulus is an important aspect of all of this because it means that we're going to be seeing more money pumped into the economy and hopefully helping with some recovery. But naturally for stocks, that means bonuses and money coming in towards them from the back end, or at least from the bottom up. Otherwise, we're also looking at an improved or at least some increased efficiency when it comes to the vaccine rollout. There's been a bit of a debacle with how that's operated, so now we're going to be seeing some level of improvement. Additionally, from all of that, it's kind of hard to sort of not look at the optimism that we're seeing, but the question remains, why has the Nasdaq 100 gone up? I thought we were moving into a cyclical territory, Alistair. Well, there is a little bit of reasoning behind this. Now, as much as we've seen over the last 2 months that cyclicals have been being the swap around, we've been seeing people move into banking sectors, and banks have performed very, very well, particularly the big three out of Wall Street. But when we look at what's going on with the tech sector, we're seeing that good tech companies are remaining good. Those that have long-term provisions, such as Netflix, with increasing subscribers just this quarter, are showing that if you do pick the right ones, you are going to be getting on the right track for more cash in your pocket. Now, moving on ahead, the Bank of Japan and monetary policy announcements were coming out today. There was no scheduled release. It was all a tentative announcement, so we've just had to keep an eye on what's been going on today. Now, the first thing that was really going on, the questions that were being asked, is most analysts kind of had the prediction that we weren't going to be seeing any policy change, and I had to agree with that. It's kind of sitting at the same place it's always been, which is minus 0.01% in terms of rates. And the real question came in to see if they were going to offer any forward guidance or forecasting for where they saw the economy moving in the near stages of the future. Now, the economic forecasts were actually trimmed from minus 5.6% to a minus 5.5%. So that is a little bit better, being that we're still in the sort of negatory case, but it's not the best circumstances for it. Those rates obviously still remained at the same place, but the revised 2022 cast was estimating some expansion somewhere in the realm of 3 to 4%. So they are expecting to see the economy get back on track with all of the stimulus plans they've been doing. We're now very closely monitoring what they're going to be doing with bonds and, of course, with some of the ETF purchases that they have, because the Japanese government is now the largest owner of Japanese ETFs. So we are going to be watching to see how that might move in the future, but that might mean we have to wait until another monetary policy meeting comes along. Now, moving on to the unemployment rate here in Australia. We've seen the unemployment rate fall. It is now at 6.6%, a drop of 0.2%, and we saw 50,000 new jobs made, with 37,500 of them being full-time and the remaining being part-time. Now, so far since the pandemic has started, we've seen 90% of the workforce actually return to work. The downside of that is that when you look at the figures and the stats, you see that there has been more part-time employment than full-time employment, meaning that we aren't getting the same amount of hours worked, and people are actually having to sacrifice a full-time position for a part-time position instead, because it's all that they can find. So when we look at those numbers, full-time unemployment is still not quite there yet. We are hoping for that to obviously continue to rise. Now, looking at what's going on for the news ahead of tonight, we have more monetary policy statements coming out from the ECB, the European Central Bank, so expect to see some action around that. We're also going to be having a press conference that follows up straight after. Outside of that, unemployment claims out of the US and, of course, CPI figures out of New Zealand. So, looking at what else there is tonight, there's not a great deal. We do have a little bit on tomorrow, and we do have earnings season continuing. So if you are, check your earnings calendars to see what might be out tonight. Now, if you do have any questions from today's video, perhaps on my other videos, please feel free to get in contact with me through any of my social media channels. And of course, don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.